Hi, this is Mark with ValueCharts.com. We are looking at a video I made earlier, or referencing that at least, where I sold 4 S&P 500 contracts at significantly overvalued, which was at the 1384 price level. I had sold some previously at moderately overvalued, but the market zipped up into significantly overvalued. So what I essentially did today was I sold some, as it turned out, a little prematurely here, and then offset that at a better price later on in the session. So I sold these first ones at 1376 and a quarter, offset those at 1375 and 3/4, so a little bit made there, and then held on to my position that I added at 1384 up here in the significantly overvalued region. Now, where I bought it was actually moderately overvalued in this bar, but it was equivalent to the significantly overvalued region on the price bar beforehand, so I was satisfied with that. And I am holding that for a long-term trade here, looking for the S&P 500 to eventually break down through this trend line that we see on an intraday basis and head a lot lower. So a lot of downside, in my opinion, left in the S&P 500. We'll continue to watch this market over the upcoming days and weeks. But the thing to remember is when you're trading intraday and you trade using value charts price levels, especially the overvalued ones in a bear market environment, then you really put yourself in a much better situation from a reward to risk standpoint. So we've got a couple of good additions here using value charts. Now, I was busy doing something else earlier, so this was a little ill-timed, but it was equivalent essentially to a moderately overvalued price point earlier. So I didn't grab the top here, but I was close enough to it where this position that I added onto here represents a pretty good reward to risk ratio. As you can see, most of the price action after that has been below that. Now, this other addition here, again, if you look at the price action, it only had a losing portion for briefly during the bar, and then after starting with the next bar over here, we see that this position or the addition here turned profitable relatively quickly. So that is what we want to look for. This earlier trade again had a little underwater experience here, but it was still moderately overvalued, so it's better than it would have been had I sold down here with fear, at moderately undervalued. So that's certainly not a bad position. Certainly now it would be profitable, but the significantly overvalued red price bars up here were much more strategic. That's all we have for this video. We'll continue watching the S&P 500 as we expect this market to go a lot lower in the near future. Thanks for watching.